program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan. Good to have you with us here again at AusBiz. Let's get across what developed overnight. Stocks on Wall Street turning negative as declining financial shares and simmering trade tensions between the US and China dampen investor enthusiasm, while gold prices continue to surge. The major indices in the US reversing earlier gains with the absence of data, prompting investors to consider the implications of a protracted trade war between the US and China, while weakness in regional bank earnings further spooked the market. Shares of Zions Bank Corporation tumbled as it disclosed an unexpected loss on loans, adding to growing investor unease about hidden credit stress. Also fueling worries about regional banks, Western Alliance it slumped after it said it initiated a fraud lawsuit against one of its borrowers. TSMC, the world's largest manufacturer of advanced semiconductors, gave a bullish outlook for spending on AI. Nonetheless, its shares ended lower. And among those stocks proving to be the biggest drag on the broader market, Palantir, Tesla and Meta. Salesforce jumped after the business software seller forecast revenue of more than $60 billion for 2030. That's above estimates. And Hewlett-Packard, that slumped after the tech company forecast annual profit and revenue below Wall Street expectations. JB Hunt shares, they jumped after the trucking firm reported third quarter profits, and shares in the gold and silver miners gained, tracking the price of precious metals higher. Well, China has accused the United States of stoking panic over its rare earth controls and rejected a White House call to roll back the curbs. This after US negotiators suggested China could avert President Trump's threat to impose 100% tariffs on Chinese goods by scrapping the measures set to take effect on November 8th. Meanwhile, Federal Reserve Governor Christopher Waller has said he supports another interest rate cut at the central bank's policy meeting later this month because of the mixed readings on jobs, saying based on all of the data we have on the labour market, I believe that the Fed's policy committee should reduce the policy rate by another 25 basis points at our meeting that concludes on October 29th. Well, the US two-year Treasury yield has fallen to 3.41%, the 10-year is down to 3.97%. Markets pricing in a 95% chance the Fed funds rate will be cut by 25 basis points at the next policy meeting, with around 5 more cuts in total in this easing cycle. Well, the US dollar is down around 0.5% on the day. The Aussie dollar has fallen back to 64.9 US cents. And oil prices have continued to slide after President Trump said he and Russian President Vladimir Putin agreed to meet in Hungary soon to discuss ending the war in Ukraine, casting uncertainty over global energy supplies. Brent crude futures down around 1.5% at $61 a barrel. Copper is off 0.8%, iron ore down a similar margin to $105 a tonne. And gold surging to yet another record high, the fourth straight session, taking the spot price past $4,300 an ounce as investors flock to the safe haven metal on those trade tensions, plus the ongoing US government shutdown and the prospect of further rate cuts. Silver also hitting another record, and Bitcoin has fallen back below 108,000 US dollars. Well, let's get more on markets. What is moving? Brad Gastwirth joining us from Circular Technology. Brad, welcome back. Good to see you. Let's start with, well, look, clearly a focus for markets is on those US-China trade tensions. How's that playing out at the moment?
Yeah, I mean, there's certainly no dull moment here in the U.S. I mean, the U.S.-China tensions continue to increase. The rhetoric from both sides seems amplified, and ultimately, I think you're going to get, continue to get some, rhetoric that's going to be more cautious and not a lot of things solved here in the near term. That being said, I think by the November 8th meeting, I do think there's going to be either another push out. I don't think it'll be a forced tariff. I actually see the extension. I don't see that tariff coming into play. But it's never a dull moment, and there's a lot of surprises. So nothing's really out of bounds right now.
We're also seeing the role of chips emerge in this tension as well, and you only have to look at what's going on with TSMC.
Yeah, I mean, first with the tensions, I mean, rare earth minerals is really the front and center of the U.S.-China tensions because rare earth minerals, you need it for every semiconductor chip. So that's certainly front and center. And then secondly, as you mentioned, Andrew, TSM, Taiwan Semi. I mean, if you look at first, the report was phenomenal. They had an absolute phenomenal report, phenomenal guidance. But they're really caught in the crosshairs because obviously China believes Taiwan's part of one China. The U.S. looks at Taiwan as an ally, and depending on what happens in the future there, I mean, there's a lot at stake given the fact that TSM is by far and ahead the lead in semiconductor manufacturing. So it's a very important asset that the U.S. would like to be independent away from the Chinese government.
How do you regard what we see in the market response at the moment? I mean, is there real concern there? Because, I mean, those asset prices continue to rise. Bit of an exception, I guess, in the session just gone. We can talk about gold in a moment, but what are you seeing, particularly in the equity market at the moment?
Yeah, I mean, the financials are going to look good. I mean, again, we're just getting the first reports out, and the financials, like look at Taiwan Semi, very strong profitability, raising numbers for next year. I think this is going to be the theme across the supply chain if I look at technology and semiconductor stocks. If I look at the retail market here in the US, I'm a little bit more concerned because there's more pressure. The job market is not good. I think it's even worse than what's being reported. And I think there's a major bifurcation between rich and poor here in the States. So the wealthy are spending or over 80% of the spend here in the US, and there's going to be a bigger basket of the lower income people because of job loss. But ultimately, I still see markets going higher into the end of the year. I think AI and the trends will continue to bring up profitability. There's a lot of wild cards, but there's been wild cards for the last several years, and the market's completely ignored macro, and I don't think it's going to be different this time around.
What are you seeing with, I mean, OpenAI seems to be making deals left, right, and center at the moment, the latest one being Broadcom. What are you seeing there, Brad?
Yeah, so I mean, this is a great topic, and it's very topical here in the States. I mean, OpenAI, it's unprecedented the amount of money and deals that's been announced in the last 3 to 4 weeks. I mean, the latest with Broadcom building their own ASIC chip. So essentially, they're going to be building their own branded AI chip with Broadcom's help. And, this is certainly less dependency on Nvidia. I mean, you had that other deal with AMD having 6 gigawatts, which is enough power for, tens of millions of homes. I mean, it's unbelievable the scale that they're spending and the deals that we're seeing. But, this is certainly a yellow caution flag for Nvidia. I mean, first you have a major deal with AMD as a competitor. Then you go ahead and make a major deal to have your own custom built chip. Now, the biggest question here is, are others going to follow suit? And I think if you have one of the biggest and best right now on the AI side, looking at alternatives, to me, it seems like others will as well. So Nvidia by far is the best technology. They have a great lead. But given the fact that OpenAI is actively looking for others and less dependency on Nvidia, I think others will follow suit, and Nvidia could feel some pressure because of that.
Now, Brad, trade tensions, US government shutdown, the prospect of more rate cuts to come, that has certainly provided a real boost for precious metals, investors flocking to it as a safe haven, of course. Perhaps the irony here is that they're concerned of asset bubbles elsewhere, and a bubble is forming itself within the gold market.
Yeah, I mean, gold has been up and to the right. I mean, obviously, I sound like a broken record on your program every other week talking about how gold prices will continue to make new highs, and that's played out quite nicely over the last few years of me first making those comments. I still see gold going higher. I mean, I think, given the uncertainty on a macro side, given the frothy valuations in equities, and given the likelihood of more rate cuts because of the economic, pressures here in the States, I think gold prices go higher. You have a global need. You're seeing central banks increasing gold reserves, and it's a great safe haven asset. So I think we'll see some pullbacks. Nothing goes up straight, but ultimately I still think it's a very important asset class to have exposure to.
What would a likely tipping point for the precious metal be, do you think, Brad?
Say that again, Andrew. When do I think it will fall?
Yeah, what would the catalyst be? What would the tipping point be?
Yeah, I mean, I don't see a major catalyst to the downside. I guess if all of a sudden, global tensions ease, and then you have even better certainty throughout, the globe, which I don't see global tensions easing to the point where there's less concern. So I think you could scratch that off. I really don't. I find it hard to find like this large catalyst that will take gold prices significantly lower. I mean, at some point, mining the resource, if mining capabilities, if there's a new way, a new efficiency to mine gold at a cheaper price, that perhaps it certainly could lower the price. But we're not there yet. And again, I think with the uncertainty, with the tangible, it's one tangible asset class that's recognized globally that everybody values, and I find it hard to believe, and I don't see any near or medium-term catalyst to drastically lower gold prices.
And are you as bullish on the likes of silver and platinum?
Yeah, I mean, I silver more so than platinum, copper more so than platinum. I think both of those are great. They're both beneficiaries. One from a precious metal, I mean, silver from a precious metal standpoint, and also industrial. And then copper from, if you look at semiconductors, if you look at other industrial applications, copper's widely used. So I think there's a bull case there as well. But I mean, if I'm looking, if I need one exposure, it's gold. But you can certainly take the basket approach of those three as well.
Great to get across what you are seeing. Thanks for joining us from Circular Technology.
Thanks, Andrew.
All right. Let's focus then on the local market ahead of the open here on this Friday. We are expecting a lower start. SPI futures indicating a drop of around 1/3%. We'll see how that plays out, and obviously with the focus, particularly on that gold sector, given we have seen more records fall in that sector. Stay with us.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.